Good afternoon, everyone. Welcome to this webinar. I'm Peter Towers, Managing Director of ESS BIZTOOLS. I hope you're having a wonderful day. Today, we're going to talk about a very exciting innovation that the government created about 3 years ago, early stage innovation company capital raising. If you have any questions during the webinar, can you please type in your question to chat, and I will answer it later on during the webinar. If you're watching the webinar on the Facebook live feed or at a time more convenient to you, you can't log straight in, but please send me an email, peter@essbiztools.com.au, and I will get a reply back to you. What are your clients doing? This is a serious question, because to give advice in capital raising areas, you need to know what your clients have been doing. Have any of your clients been undertaking research and development activities? Because it is the prime prerequisite for someone to be able to utilize capital raising opportunities that's offered by early stage innovation company. Have any of your clients completed a prototype or a design, or designed a new computer program or whatever? Do you know? Have you been monitoring what your clients are doing, especially during the lockdowns? Normally there's around 15,000 companies a year, the majority of which are small, claim the research and development tax rebate. But there are expectations that could be as high as 20,000 this year because of the activities that are believed to have been undertaken during the lockdowns. So are your clients interested in trying to obtain a grant to assist with the commercialization costs? Once someone's got to a prototype stage, they start to gain an appreciation of what it is going to cost them to get their pride and joy, their prototype, into the market as a completed product or service. Costs a lot of money. The government actually offers $1 million on a 50% funding basis for the commercialization process. This is called the Accelerating Commercialization Grant. So the government's acknowledging that in some cases it could cost $2 million to bring a prototype into the full commercial space, making it a product that is able to be sold at a commercial rate. And the grant is half of that, $1 million. So where is your client going to raise their 50% from? Irrespective of what the final cost is, even if the project's only going to cost 300,000, where's the client going to raise 150,000 from? A lot of people are not aware of the lifeline that the government introduced about 3 years ago to assist people who were undertaking these research and development activities. And that was the introduction of the early stage innovation company. Now it's primarily targeted at young companies. Now that doesn't mean young executives or young directors, it means young companies. Normally under 3 years of age, but there are some instances where a company up to 6 years of age can be deemed to be an early stage innovation company. But there are turnover and expenditure limits. The turnover is restricted to $200,000 in the past 12 months without including any grant received under the Accelerating Commercialization Grant, the grant that I just mentioned. And expenditure has to be under $1 million in the previous 12 months. So that's really curtailing the company. This opportunity to utilize early stage innovation company is heavily weighted to companies that have undertaken research and development. And I'll show you why shortly, but there's a distinctive bias towards companies that have undertaken research and development, because that's really what it's about. This is part of the research and development journey that started with the research and development tax rebate, which is 43.5% of the eligible R&D expenditure for companies with turnovers under $20 million. They can then move into seeking funding under the Accelerating Commercialization Grant, and they could utilize the opportunity to raise money under Early Stage Innovation Company as the information they need to disclose to the entrepreneurs program who administer the Accelerating Commercialization Grant as to where the company is going to get its money from to match the 50% from the government. But the company then must pass 2 of 3 tests, and we're going to go through those shortly. But it must pass those tests, which will classify it as a early stage innovation company. But this program has been deliberately designed to make it attractive to investors. Why? Because they get taxation benefits. Why? Because the government was trying to give them a carrot, give them an incentive as to why they should invest in a young startup company in Australia. And that's generally what these companies are, of course, primarily under 3 years of age, some cases up to under 6 years of age, turnover under $200,000, expenditure under $1 million. They are young, small companies. The government is trying to encourage investors to have a close look at them because of the taxation benefits. And the taxation benefits for investors are that they receive a 20% rebate on the investment they make in the company, up to a maximum rebate of $10,000 for a retail investor or $200,000 for a sophisticated investor. And they don't have to pay any capital gains tax on those shares that they're issued as part of this process to be declared as being eligible as an early stage innovation company, as long as they hold those shares for longer than 12 months and less than 10 years. And at the end of 10 years, the company can be revalued, and that revaluation amount becomes the basis for determination of that investor's shareholding in the company. Their cost price is adjusted, in other words. Companies need advice for the preparation of the due diligence documentation. There's a series of documents that have to be prepared by the company that investors will want to see. And in some cases, under one of the tests, those documents have to be supplied to the Australian Taxation Office and Oz Industry as part of the determination as to whether the company has met that particular test, which we're going to come to in a moment. And in another test result, the company self-assesses, but it needs to have the documents because ultimately they've got to go to the tax office. And it'd be very embarrassing to have told investors that their company is an early stage innovation company. The investors have purchased the ordinary shares in the company. It's not a loan, so they can't get their money back, in anticipation that they're going to be receiving these taxation benefits, and then to find out they're not getting them would not be very popular, I don't think. And it's an opportunity for accountants to be appointed as the virtual chief financial officer once the capital is raised, because these types of companies end up having some experienced directors on the board. One thing experienced directors require is regular, prompt, accurate financial accounts. An obvious person to appoint them or to be appointed is the external accountant that's assisted on this process. Companies are going to need the normal documentation that any company would need to be able to raise capital, a business plan, looking at the next 3 to 5 years, predictive accounting reports, which comprise budgets, cash flow forecasts, and a projected balance sheet, all linked back to that business plan. So that's going to also cover the next 3 to 5 year period. So now we're going to go onto the website and have a look at the crowdsource fund, at the early stage innovation company package. We have a procedure control form which will guide you through the process, but the key document I want to show you is the early stage innovation company calculator. Which we've brought up there now, so you should be able to see that. I'll just take it back to the beginning. So this is the document that gives you an overview of how this system works. The first series of tests is looking at the company. When was it incorporated? Is it under 3 years of age? And we then go into the test time determination. Is the company incorporated within the last 3 years? Did the company have expenses of under $1 million? Was its income under $200,000, not including any accelerating commercialization income? The tests there for the under 6 years are also disclosed, and recent registration on the Australian Business Register in the last 3 years. We then go through the first test. Now, the company can elect not to undertake this test, which is called the gateway test, and move straight into the principles test. But let's go through the gateway tests first. The first question relates to, did the company spend 50% of its money, of its expenditure, in the last 12 months on research and development? If it did, it earns 75 points. Or did it spend between 15% and 49.9% of its expenditure on research and development? If so, it earns 50 points. Now, it's got to earn 100 points to be classified as an early stage innovation company. Has the company been admitted into the accelerating commercialization program? Now, that can be at any time in the 3 years or the 6 years, whatever the qualification might have been under. And if so, it earns 75 points. So if the company's obviously spent more than 50% of its expenditure on research and development, and has also been admitted to the accelerating commercialization program, it's got 150 points. So it's definitely qualified as an early stage innovation company. Has the company completed an accelerator program, which is run through an organization that's appointed by AusIndustry? If so, and it's completed that program and appropriate statements are able to be disclosed, it earns 50 points. Has the company already raised at least $50,000 in equity capital? So that's share capital. It's not loan funds, it's share capital from arm's length investors. And if so, and the company, we need to summarize who the shareholders were and make sure they're not within arm's length. And the company will earn 50 points for that process. Has the company got any equitable rights under a patent or the owner of a plant breeder's right anywhere in the world? And if so, the company earns a maximum of 50 points. If they got both of those, they still only get a maximum of 50 points. Has the company got an innovation patent or a registered design anywhere in the world? The company can earn a maximum of 25 points. If the company has entered into a written agreement with an organization that's listed in the Higher Education Funding Act or the Industry Research and Development Act, again, a maximum of 25 points can be earned. So you utilize this calculator and it will have added the result from the various points that you've scored. And if you exceed 100, well, you have self-qualified. You don't have to apply to the Australian Taxation Office, but you need to document, and we have all of that material within the system. The forms, the declarations for signature by the directors, so that you can present as the accountant to the client a complete summary. You can put it on a computer stick so that they can supply that information to potential investors. Now, if the company fails the gateway test, there's no great disadvantage. They've failed it. It might be because they're a brand new company. They might only be a few months old. They haven't had time to do any of these things. They can then move into the principles tests. And this is what we have on the screen now. Now, there's 5 key questions asked in the principles test. Is the company genuinely focused on developing for commercialization one or more new or significantly improved products, processes, services, or marketing or organizational methods? Now, the space here requires you to write a commentary on that. Normally, it's probably about an A4 page minimum to answer each question, because you need to give details. You need to argue your case, because this report, these answers to these 5 questions, is got to be submitted to the Australian Taxation Office, and they submit it to the team at Oz Industry to evaluate. Takes them about 6 weeks, and then they get back to you, and they will issue a certificate saying that XYZ has been approved as an early stage innovation company. The second test, the business relating to these products, processes, or services has a high growth potential. High growth potential. And again, why? Why do you think it's got a high growth potential? That needs to be argued. And as accountants, you may have to be suggesting to the client that they get a marketing expert to submit some supplementary evidence on to answer some of these questions. Can the company demonstrate that it has the potential to be able to successfully scale the business? Obviously, that means grow it. Take it from a very small business to something that's quite substantial. Successfully scale the business. And that will need some projections, some calculations, some supporting information, not just, oh, well, the directors think we're going to be able to scale the business. That sort of response won't win you the result that your client's looking for. Can the company demonstrate that it has the potential to be able to address a broader than local market? So producing a product that's suitable for the Sydney market is not broad enough. The Australian market maybe, but the government is really trying to see that small companies can take products to the world. So we need to be thinking about that. And can the company demonstrate that it has the potential to have a competitive advantage out of this process? So they're the questions. You indicate then what the result is. Do you believe that you're able to qualify? If so, within our documentation, there is a complete process of the forms required for the due diligence that the company then has to submit to the Australian Taxation Office. There should not be any delay on this, because this all has to happen fairly quickly within a couple of weeks, so that the opportunity that exists because the company's meeting the requirements must be acted on. So the information submitted to the tax office, they have a section there that will review, talk to Oz Industry, and come back and give an opinion. If you have got that okay, you're then able to proceed. So that's the way that this process works. It's fairly straightforward in how it's all been administered. And it gives the company a great opportunity of being able to raise capital to help undertake this commercialization process. So hopefully you have a good understanding now of how all that operates. Within ESS BIZTOOLS, we have tools to create opportunities. As part of our promotion, which we have been running, there's 7 great products. The investment is $795, 12 months up front for 24/7 access. There's 7 great products. You receive 4 of them as part of the standard package because they're documents and tools that we want you to be able to use if you're going to be using ESS BIZTOOLS. So there's a training module. There's our monthly newsletter, which our subscribers badge and send to their clients and prospects. You receive 340 papers, which cover 60 odd categories, which a subscriber can badge and send to their clients and prospects. And you receive the SME needs analysis, which is our very important document, which gives you a whole series of matters that can be discussed with a client to get their feedback as to what their concerns are in their business, so that you can be conscious of what's worrying them, so you can plan the services that you can offer to them built around their requests, rather than you trying to think of things that they might be interested in. You then pick 3 additional products to get yourself started. Then you can add to these during the year if you wish. We have 5 business health check products. So you pick which industries you're interested in if you want them. But then we go through this range of other material: business planning, tradies charge out rates, professional firms charge out, retail wholesale stock mix pricing calculator, buying a business, client mentoring and coaching modules, client seminars and webinars, crowdsource funding equity raising, which is the running mate for early stage innovation companies. It's for companies with turnovers up to $25 million, so it's a bit different. Debtors management, early stage innovation company, what we've been looking at today. Government grants, leadership modules, the personal property securities register, which can cause a lot of problems to businesses through not having sufficient knowledge of it. Selling a business, debtor systems manual, succession planning, and survival in difficult times. This is the product package which we've prepared to assist you to be able to sit down and talk to clients and understand their issues. There's 42 separate questionnaires, and there's 42 supplementary articles to give some responses to those questions that you could pass on to your clients, or you could embrace them in a report back to the client so that they have a better understanding of where they need to go. If you're interested in subscribing to any of these products, can you send us an email and we will send you the subscription form and the product package. Send the email to peter@essbiztools.com.au, please, and we'll get back to you. Future webinars. Tomorrow, Wednesday the 8th, we have a webinar on retail and wholesale stock mix pricing calculator. And then on Thursday, we have professional firms charge out rates, so you can get a good idea of how all these products fit together. If you want to contact us, please do so. peter@essbiztools.com.au, or telephone me on 1-800-232-088. But please visit our website, our brand new website, so you can see all the material which we have, www.essbiztools.com.au. Thank you for joining us for this special webinar. Stay safe, and I look forward to talking to you again in the not too distant future. Thank you. Goodbye, and have a great day.